All right, there we go. You guys can hear me okay? It took, for some reason, my live stream software just randomly picks a different microphone, and I have to go into the settings. I don't know. It's weird. I haven't done a live stream for a while. I just kind of got tired of doing them. And again, like, this channel for the most part is just a method for me to, it's almost like a audio diary or like a video diary. It's kind of a way for me to get my stock thoughts out of my head. And that's when I started the channel. I started it back, when did I start it? I think I started it before COVID, but it's just a way for me to kind of burn some of that energy that I have when, thinking about the stock market and not have to drive the people that are close to me crazy all the time. So, I want it to grow, but at the same time, it's not a big deal if it doesn't. I like having the audience that I do have, but I'm also like, don't want to always commit a bunch of time to it and do live streams, every single Saturday. So that's kind of why I pull back on those. But decided to do one today just because of all the price action that we've had. Is a really big, very tiring week from my perspective, with the movement and the volatility and just the extreme focus kind of required. But luckily, we were already positioned for that. And so, at least I was. Captured pretty much, didn't capture all the short, but captured a huge chunk of it. And then, threw up a couple more trade ideas in the private member group, like RTX and GE were ones. It was just kind of a rolling clear out, that I saw. So kind of started with like some of the tech stocks, and then, and then, you know, just turned into like full on throw the baby out with the bathwater, you know, move, we saw pretty much everything getting sold. And so you know, GE and Visa, like I'll go through that kind of stuff. Those are kind of like holdouts. People were kind of hanging on to those, and then eventually they got cleared out because I think you probably are seeing forced margin selling as well. You've got big institutions and people who've been loaded up on margin. If we go to the VIX, and I'll just kind of start into it now. You go to the VIX. And even on like the down move that we've seen, you know, the VIX, yeah, it came alive, but then boom, right back down. There's been no fear. And you only see fear when I look at the VIX. Like these big spikes, these are fear. Okay, there's COVID, that's fear. This is what, August time frame? I don't know. I don't remember what happened there. A little blip of fear there. Excuse me. And we got fear now. So now that we have fear, you know, I don't want to be shorting, or at least I don't want to be like loaded up shorts. I think there's probably still some spots to pick, but it's not something that I want to. I'm not going to be advocating and saying like, oh, time to get short. You know, like there's a huge opportunity ahead of for us. No, that opportunity is come and gone. You know, you can usually tell we're going to have a good trade if you look at my channel, especially if I'm calling for the short side. And they don't always work, of course, but you know, I get a lot of trolls on my channel and they come in and, oh, you're always wrong. You're always wrong. Go back and look at my videos the last couple weeks. You won't even see one troll comment. Like they're just gone, you know, they're just obliterated. They're like, oh, he got that one right. And I can't admit it, you know, I guess, I don't know. So now that this is kind of played out, the downside, and I do think there is more downside. I think we have entered a bear market, but it's obvious to everyone right now, and that means that it's probably time to suck in some more longs. And what you have to do that is we've got to signal the coast is clear. All right, we got to make everyone feel comfortable to get back into the market again, because as of right now, you saw that VIX. And I've kind of been looking into CNBC and watching. I don't ever watch CNBC. I think it sucks, but because they basically just, I always tell people, all CNBC does is tell you why you lost money or why you made money usually, but they essentially just tell you like, this is why you lost money. I don't care why I lost money. I just care whether I lost money, right? And they're never going to tell you. You know, they're never going to tell you, hey, you're going to lose money if you get out, you know, like get out or you'll lose money. They're just going to come and say, well, we lost money because of the tariffs were worse than we thought. I don't care about the tariffs, guys. If you look at the charts, they're everything. There's our bearish engulfing on the daily. That was the false breakout and failure and the rejection. That was the sell signal. That was the reason to get short. Regardless of the catalyst that came ahead of that, or you know, after that, it would have been something. I don't know what it was going to be. And so when I tell people, hey, the information, the moves oftentimes are forecasted in the charts. It doesn't. I can't tell that there's going to be some like black swan event or a catalyst or a tariff thing. I don't know what that's going to be. I just know it's going to be something. And again, the move, there's your negative divergence. All right, the conditions were there with everybody complacent, everybody loaded long. You have the gunpowder for this downside move. So it just takes something. All right, that's what it is. It's all about, what markets do you want to be in position for? Do you want to be positioned long when everyone else is long and you've got very probable conditions for downside? Yeah, that's what I look for. So that's what I saw. And then there's your bear flag. Again, this was almost too easy, to be honest. It was like textbook bear flag, which was a little scary because usually when I see something that's so clear, it's like, ugh, are they going to really just make it that easy, or are they going to try to trick us? Because I'm always looking for market makers to kind of, you know, run games on people. But anyways, downside flag, downside. The major target, we hit it and we're below it now. There's your major target. It's about 430. we're below it. So, you know, but that's to be expected because the momentum was just like out of control, especially on Friday. But, you know, market's closed. We'll see what comes out over the weekend. There's two things that are going to, you know, I don't think we're going, I don't know, we could just open up, open right at where it closed, but it's so volatile. I just don't think that's going to happen. I think you're either going to gap up or gap down. So there's definitely kind of binary risk. Next level of support on triple Qs, about 413. Okay, we've got support there. There's lots of reactions. That's our next level. So if we gap down, I think you'd gap down to about 413, and that would most likely be an opportunity to buy. I started to go and getting into longs on Friday. Closed out pretty much all my shorts and started to take up some longs. I'll probably look to continue to add to some of those longs. You know, I'm just not interested in shorting it right now. All right, we're oversold on the daily. The VIX has spiked, which means that people have put protection. Again, going back to CNBC, I've heard like several people who like claim to be geniuses, but they only say now, "Oh, I'm protected with puts." Yeah, you're protected now after you've taken a beating. Where were you 2 weeks, 3 weeks ago? You weren't talking about big downside. You were talking about, oh, you know, earnings are great, and we could probably, you know, analysts are targeting this, and we could probably get to there, just crap like that. But now they're all like now they're all protected. So, you know, people are hedged, and that will put a cap on the downside. Okay. So that's, you know, I'm leaning towards a gap up because I'm thinking that there's just, it could happen, but I'm just thinking like they're going to probably have the weekend to come up with a plan for kind of stabilizing the markets. They have to stabilize the markets because the banks will collapse and, you know, all kinds of stuff happens. So, all right. So that's my diatribe on that. Triple Qs, you know, you also, I did mark this out because we did have a reaction low right there at 422.83. And that's pretty much where we closed. So I think we could, you know, I think we're at support or near relative to the moves. You know, there's maybe another 2.5% downside to that 413. So that would be another level of support. And then you're probably going to get like a decent kind of bear market rally, which they can be strong. And, you know, if we just go back and look at kind of what those look like. I mean, the last bear market was 2022. And I mean, this is a really impulsive down move. So I would see probably an equally impulsive up move on anything, any kind of good news. But that's a 17% rally there, you know. And then this one here, there's 9. So I would probably put not anywhere from like 9 up to 20% rally potential. All right. And so that would, depending on where we are at, when or if the rally starts, there's 6 3/10, you know, up to the 200s. That's about 16. And then pretty decent resistance up around 500 would be 18. So those would be my upside levels. Just mark those on your chart. You know, like that one is a big level for me. You know, I would, if we're going to have a bear market rally, it would likely end right around there. You might overshoot a little bit, but in general, you're going to kind of stall out right there. And then, so it's a very objective for someone who's thinking we're going to maybe enter a longer term bear market. It's very objective for me to want to short up there. And then you got the 200s. Although the 200s are so easy, they're just so obvious. It's like you're either going to probably fall short of the 200s or overshoot them. A recovery of the 200s would be great to see because that is what I need. That's what we need to get everybody coast, you know, kind of coast is all clear mentality. And that's when, you know, we recover those 200s. Then I'll probably tune into CNBC and just kind of get a feel for the vibe. You know, are they'll be putting out that coast is all clear vibe, And that's where, you know, I want to see that, because I need to have, you know, I need to have the shorts all out of the trade. Nobody's hedged and everybody's back in the water. Okay, triple Qs. That is it. I don't think there's a whole lot else. One thing I did want to point out, if I go to the SPY, I don't do a lot of SPY analysis. Yeah, let me mark this level out here. I think that probably at the low. Yeah. So the reaction low there, whether it holds, I don't know. There's not a ton of reactions, but and then you've got a level down at 494.50. Yeah. One thing about the SPY, if I look at the, man, this is such a big move. You don't see moves like that hardly ever. If I go to the monthly chart, yeah. So monthly, I mean, we've got that's a bearish engulfing there on the monthly, but then also you've got, if I look at the PPO, let me blow that up. Look at that. Okay. Bearish crossover on the monthly, and you know, that's what that, we actually had it last month, just barely. This month it's, you know, clearly red. And it just is indicating that the last time we saw the crossover was back in 2022, which was the last bear market, but kind of a fake bear market really, because it was an official bear market, but we didn't really break any real support levels. And then the one thing though that I'm really paying attention to, look at this monthly divergence. All right, that is momentum. Yeah, really right there. And then here it is on the PPO. That's momentum dropping off. So this entire 2024-ish rally, all that price action there, or above the highs, was divergent highs, which tells, and that's leaning into my longer term thesis that divergent highs have a high probability of getting sold into and indicate the likelihood or the conditions are ripe for a trend change. And I'm talking about the monthly trend. So there's your monthly trend going back to February of 2009. All right. And that we made a new high, but it was a divergent high. So I'm looking for big trend changes. All right. It's not going to happen over once though, because this is going back, you know, since 2009, over a decade. So the trend change, the major trend change, is also likely going to play out over like a decade or at least many years. Usually the downside's a lot faster, but I would think damage could be done for over a decade. We might fall for a few years and then it might take years to recover. So that's big picture stuff. Don't throw too much weighting into that. That can change. Just because we have divergences on the monthly doesn't mean we can't continue those divergences, which would mean maybe we hit some support and have another leg higher. So I can't, you know, I don't throw a whole, you know, I just keep that as the general thesis because I see it in the charts. And until that changes, I have to kind of keep that as the general thesis. Negative divergence on the monthly. All right. So that is that. What else do we want to cover? IWM. I have some interesting things to show you. So I'm definitely going to, you know, show you a few more things, and then I'll get into your guys' stuff. Let me go to the daily chart. IWM. I marked this. Sorry, my charts are a little slow to keep up. Might have to go the weekly. That's off the 2009 lows. This is COVID, and it did slice through it a little bit, and then, actually, I don't know what I'm doing with that one. Never mind on that. I think, you know, you have to make it like maybe down here. There's decent. Yeah, never mind on that one. I was playing around, seeing if I could find some sort of a trend line support, but I don't know. The one thing though to take note of on all the major indices, SPY, QQQ, and IWM, is we're now oversold on the weekly chart on the RSI. We weren't oversold before. Last week we weren't. This week we are. So just means that like that doesn't mean much to me in general. Oversold is not, you know, that important, but because it can become more oversold. But if I look at like triple Qs and I'm looking at the weekly chart here, you really want to look historically. Where does this thing max out on being oversold? Because it's going to follow the historical trend. And I would say, you know, this is like, that's 2008. So are we in that situation? I don't know. Maybe, if we are, I don't think it's going to happen right now. You know, if we're, the 2008 stuff where you had like big financials breaking and just actual structural problems, you starts to play out over time, not just initially. So I would say, to me, it looks like this thing is about right there. That's about where triple Qs gets oversold on the weekly. And here's the last bear market right here. Well, actually, this 2008 was one too. So, you know, that would be like max oversold 20. But here's the .com bust, which was a very tech-centric bear market. And, you know, somewhere right in there is about as oversold as it gets, around 27 or so. And then you look at where we're at now, and we're close. Not quite there, but we're in the zone where it's not objective to be shorting necessarily. Okay, that's my case on triple Qs, and that's where I'm at on that one. One more thing, I'll just point it out. There's a lot of stuff to point out because it was such a busy week. The 5-minute chart. This is very, you know, this is short time frame stuff. This can change on a dime. So I'll just show you where it's at as of right now. And Monday morning, it's likely going to change in one way or the other. But on this one, you can see we're all day on Friday, we were building bullish divergence. Momentum was going higher, and yet price kept having these little waves down. All right, that's a divergent low, that's a divergent low, that's a divergent low. And they closed at the lows, but it's also a divergent low. Momentum was... The selling is drying up. That's what that's saying on the short time frame. So just because you have that doesn't mean you're going to get the rally. You want to kind of look for that rally for buy signals. But we did close what looks to be basically kind of at support with bullish divergence on the 5-minute. So the conditions are there for at least a short-term rally. Maybe fill this gap here. We're so oversold that I would suspect that if we're going to have some sort of news, it's going to be a big impulsive move up to fill the gap. Then you might see some sellers step back in, but I could definitely see, you know, bulls starting to take over for something of a bear market rally. All right, that's all I've got on the broad market analysis. I want to show you guys this, very important, and it was very interesting to me, and I think there's a trade here. Let me get out of the 5-minute though. TLT. Okay, they were actually dumping that on Friday, which, oh, that's interesting in itself. So the bonds, TLT, you know, gapped up, obviously up 1%, but they were unloading those a little bit on the gap up. Pretty much, did it sell all day? Yeah, sold all day. That means that institutions are moving out of bonds. And because institutions are the ones that move the TLT, so institutions are moving out of bonds and they're deploying capital into stocks. They're probably buying the Mag 8s, is what I would suspect. You know, they'll go to safety first, and there's safety in the Mag 8s because they're big moat companies that are still profitable, very profitable, and so they'll go there first. The crap always floats to the top at the end, but the beginning they're going to buy the quality. So that's how I read that. And then you look at the 10-year Treasury, you know, kind of rising. It's the opposite of the TLT, but there's your 10-year Treasury. You know, still move lower because you had the big gap down. But intraday, it's what happened intraday, because that's where the big institutions, that's where there's liquidity. It's not about the gap. The gap is the pre-market where it's not that liquid. You know, you've got futures and stuff, so they're pretty liquid, but but then when the market opens, that's when you have maximum liquidity, and that's when they can move their billions and trillions around and all that. And they were, they were selling bonds. So interest rates have fallen quite a bit from the high. You'll see here they're down 17% essentially. That's the percentage that they've fallen. We're down to around 4%. And then if you look, this is what's interesting to me. XHB, Homebuilders. I'm all over this trade if it actually shows up. It's not there yet, but Homebuilders very interest rate sensitive, and if you have falling interest rates, that's bullish for Homebuilders. XHB up 1% on Friday. Everything was getting obliterated, right? They were just unloading. They were buying this stuff. That's what this is. And so gap down and rallied up. When I go into my Homebuilders, this is the stuff when there's like panic in the streets. We keep calm and collected and find the opportunity. Look at the Homebuilders. They're all up. They're not all. This is Carrier. They make air conditioning. So that's really interesting to me because I think they make them here in America, but so I don't know, but whatever. Regardless, the charts like the Homebuilders, specifically the Homebuilders, DHI. So here's the setup. Bullish divergence, bullish falling wedge. We need a buy signal, which would be a break of the resistance. We don't have that yet. So we need that. So watch for that maybe Monday. It might show up. And then if I look at like Lennar, this one kind of already broke out. It's just been back testing. So it is objective. Like I think, it's objective to buy that support. Can continue to backtest though. So maybe what you want to do is look at like the hourly chart, draw something like that out, get yourself that like a trend line to kind of trade off of. See if I can find it. I don't know, somewhere right in there. And then a break of that would tell you, okay, we're done backtesting, time for it to rally. So that's that one. I mean, PHM, these all they basically have the same look. Bullish falling wedge, bullish divergence, no buy signals. The target, you want to target like the widest part of the wedge. Take it at the point of the breakout. Oh, sorry guys, I got hit my mouse. I don't know where the point of the breakout is, so I don't exactly know where the measured target would be. But if it comes soon, and we're at the apex of the wedge, so I think we get it soon, then you're going to, that's your measured target. Now, we're in a bear market, so what I like to do, I've got all these kind of like mantras, but in a bear market, typically you'll fall short of measured targets. So keep that in mind. And, I think that's a nice level there on that one, PHM. It's about 120.50. Don't shoot for the moon and go for the full measure target. Maybe cut it a little short. But still, that's going to be, if you catch that buy signal, it's a 15% gain on that one. So those all look good. Homebuilders look good. Yeah, that's what was interesting to me. And then let me do a real quick scan, see if there's anything else I want to talk about, and then I'll get into your guys' stuff. Anything that I haven't really pointed out already. Yeah, I guess that's about it. All right, let's look at your guys' stuff. I know like Nike kind of looks interesting, but let's look at, all right, PZZA. What is that? Papa John's? Okay. Papa John's. It's not that interesting to me. Look, you're in a downtrend. There's your downtrend. You got to clean it up a little bit, but downtrend. Oh, hold on. Downtrend. All right. And you're not at any kind of support. You don't have any bullish divergence. You do, but it's not confirmed. Everything's pointed down. PPO hasn't crossed over. That's pointed down. RSI is pointed down. So if this just goes like that and hits that support, you're going to burn through that divergence and there's just nothing there. I mean, yes, you can buy at support, but it's in a downtrend, and it, you know, I like to buy things that are moving down at support when they have bullish divergence. So that's what you want to look for. I mean, yes, bigger picture, there's some divergence there. So yeah, see what that does down near support. But right now, that's not an objective level. So that's it. All right, we got I'm just reading through the comments. August was the Japan carry trade. Okay, yeah, I guess that was going on. Intel. Yeah, I mean, I mean, it's kind of basing out. You could maybe say this is like a base, but it's not that interesting to me. I mean, you're going nowhere. Your money's going nowhere. You have bullish divergence, but it's not great. I mean, look, that's pointed down. That could get taken out. So yeah, I don't really like that one a whole lot. It's just I don't trade the range, if anything. You know, if you want to trade the range, fine. You've got this like lower range here, and you've kind of got this upper range, so you can trade those little bounces, and then just put stops. You know, put stops, appropriate stops. You don't want to put your stop like right below the range. You'll get stopped out. They're going to clear you. I mean, algos, they hit levels, are going to run little stop rates on you. So you got to kind of, you know, have those out of range, but yeah, I don't see anything that's super interesting here on this one. Palantir. Well, that one's going to my target. It's halfway there. So my target on that one was that 65 or 65 70-ish. You know, I've got it marked right there. And yeah, it's going there. Down 12% on Friday. It's probably gonna you know, probably going to gap down there. You might see these crap ones just get taken to the woodshed while they're buying quality. This is a retail mania stock. You know, I only know because I mean, I know it is because I hear about it, but then when I sometimes I'll go through the various YouTube channels and I just look for people that I just can tell don't know anything. Like, they don't know what they're doing. They follow price. They draw weird little trend lines that based on like hourly charts that have no real value. And I look at what stocks they are, you know, showing on their channel and which ones their commenters are asking about. And it's stuff like this. It's Palantir, and it's, you know, it's the things that go straight up is where retail, you know, things that go straight up. That's basically what it is. Retail loves that stuff. And they're never looking for any real downside. They'll come out and say, "Oh, well, I wasn't expecting that." They don't look for it because YouTube is retail, and retail is like 90% long. So that's why my channel doesn't get a whole lot of popularity, because because of these divergences, I've been looking for downside. I'm like, well, look, it's not popular to look for the downside, but it is in the charts, and I can't go against what I see. So that's what I see. But now, you know, now that's for the time being, that's all over. We're looking for some upside. Although I could see another gap down, guys. If we get another gap, another gap down, retail is going to just puke up their shares if they haven't already done so. That was a painful week for people that were long, like 100%, massive losses and margin calls and all that. All right, so Palantir target right there about 65.70, and then you probably get a bounce and then continue lower. But that continue lower doesn't mean it's like going to be the next day. We could like that, kind of grind around and bounce. Could even put in a new high or backtest the trend line. That's possible. Bear market rallies are strong, and you know, TSM. Is that Taiwan Semiconductor, or which one is that one? Yeah, that is. Nah. Let me see here. Yeah, I mean, it's at support. Well, I will say that. It's just like the triple Qs and stuff. I think you kind of closed at support. I see some reactions here. There's one. There's a low gap up. There's one. Big green candle where it gapped way down and ripped right up to support. So it held. And right there. That is interesting for sure as a buy. There is no divergence on the daily chart. Let me look at the hourly. No divergence on the hourly chart. So you don't have that, but you don't necessarily need that. You don't have to have it. Maybe what it's going to do, when I see stuff like this, I kind of try to build the scenario of like, okay, how can this reverse? Because right now I don't see enough signs that it's going to reverse in any meaningful way. But it is at support. So what it could do is this. Run up, fill the gap, okay? Then head back down, undercut the lows just briefly, and that would put in divergence. So it'll go like this. The RSI and PPO will move up. Then it'll roll back down, but make a higher low in momentum, while lower low in price, putting in divergence. And then you've got the makings for what could be like that bear market rally. Maybe that's what's going to happen in the market. That's interesting. So maybe there's like a move up. I'm probably going to sell. You know, I'm long right now, like triple Qs. I'm probably not going to hold on to that thing for anything crazy. If we don't have divergence, I would want to see that for any kind of major move. This could just be a quick trade, but yeah. And then, you know, and then boom, you get that a decent bear market rally where where you're going to move up downtrend line to maybe watch. Okay, yeah, it's interesting. You're at support, so I could see a rally, then maybe a sell-off, undercut the lows, put in bullish divergence, then a more decent, more sustainable rally, kind of bear market rally. Okay, Disney. Yeah, it's interesting. Let me look at Disney. Let me get to the daily chart. Massive implosion. No bullish divergence on the daily. But you're probably at support. Let me look. We're just going to mark the lows here. Okay? There's the lows of that former reaction. That's what people will be looking at. So you've got a little bit of support, and you've got better support down at 79.43. Again, this is, to me, I see maybe the same situation as that TSM stock. Since you're at support, maybe a little rally, then a new low, undercut, lows, put in bullish divergence, run a bunch of stops, and panic people out, and then a more sustainable rally. That's the way I'd be leaning right now, only because if I had bullish divergence here, then I'd be leaning for that bear market rally to maybe start. But because we're way oversold, you can't get bullish divergence with the setup. The only way to get the bullish divergence is to rally a little bit, or at least trade sideways. If you trade sideways and then the charts start to reset, okay, then you can get it, and that's possible too. So I'll be on lookout for that. If we just trade sideways and I start seeing these hourly or these RSIs on the daily and stuff start to reset, could indicate that, okay, now we're going to have one clearing move to the downside. If I look at the hourly, though, see that? Like, you're way oversold. You're at 12 on the hourly. Historically, if we look at Disney, there we go. That's about as bad as it gets, and it's slightly worse than that. Yeah, so I mean, we're as oversold on the hourly that Disney really gets. So I'm, again, leaning like this. Rally, maybe fill the gap, undercut, bullish divergence, bear market rally. Okay, that's that one. now that I'm kind of working through this, that's almost a scenario I'm looking for at this point. Archer Aviation. Is this it? ARCHACHR. Let me look. You're at the 200-day exponential, you know, bouncing off of that. They're probably not affected by the tariffs per se, but the parts that they order would be. I guarantee there's parts that they're ordering from Germany, you know, Bosch, things like that. There's parts that come from other countries that will be, you know, affected by that. So that will raise their costs. And that's what this is all about, is raising costs. There's your bull trend. You know, there's a bull trend on the daily chart. Not a ton of history on this one. Was this a SPAC? I just want it, you know. This looks like a SPAC to me, and I'm very... These were like the biggest scam ever. The only reason I asked if it was a SPAC is I see the IPO during 2020. A ton of SPACs came online, IPO during that liquidity pump. They were kind of crap companies, just not profitable, and there were SPACs always open at $10. So, you know, this thing's been obliterated. You know, if you bought it at that IPO, you know, you pretty much lost all your money. Unless you've held it. I mean, you have negative divergence. Like, there it is. Boom. Negative divergence. That's a divergent high. That's also a divergent high. And you're trending lower. So, I would say you go down to this trend line over time. You're at the 200, so yeah, you might get a little bounce here. But I'd say you go down to the 200 over time. Or not 200, that trend line. All right, that's what I have on that one. MOS. Well, that was good. I did not. That one, they did get me on that one with the big move down. I didn't have a huge position on it. I mean, I do diversify. It was just a trade, but this kind of fell victim to the unload of everything. I still like it as a longer term kind of thing because this is something it can go lower for sure, but it's down 70% from the highs. So it's not like Apple that's just, you know, everybody was loaded long and you've got a bunch of longs. It's like you've already, you know, taken a lot of that out. So the downside's more limited. And you have bullish divergence that has been building. It's very clear on the weekly chart, you know, bullish divergence there. So, you know, big move on Friday, but I think from there, I think the downside's relatively limited. And I always talked about it in this trade. I said, look, they're holding support, but if they can't hold it, they're probably going to go down to the bottom of the wedge for another push down. And that's basically what they did. They can go a little lower because they didn't hit the bottom of the wedge. It's down a little lower, but they're back within the wedge. So yeah, I mean, I'd put decent odds they go down to the bottom of the wedge. And then from there, that's you know, kind of an objective area to buy, and then wait for the breakout. But I don't know if I'd buy it down at the bottom, guys. I'd just wait for the breakout. We're at the apex of this wedge. This wedge has been tightening. We're pretty much at the apex, so this should make a move soon. Always be aware that sometimes when you have such a clear pattern, they'll run the stops by dropping it down. Clear those, you know, clear it out, and then reverse it. So that's something I'd be looking for. If you see it drop down like that, do we still have bullish divergence? Okay, if we do, high probability it's a stop raid. If we don't, then the bullish pattern failed, and you know we wouldn't want. There's nothing to kind of build a bullish case off of. So that's what I look for on that kind of stuff. Silver and oil. Well, silver got roasted. It's funny because I had a couple silver. I had some silver and gold bars, and last week, not last week. Well, yeah, I guess last week, midweek last week, because I know how to read the charts and I put the probabilities in my favor, I'm like, okay, we're probably going to see this stuff sell off. I'm going to go sell it. And so I went in and sold that stuff, and you know, it was a good move. All right, gold. What I noticed when I was looking at yesterday, bearish engulfing there on gold on the weekly chart. This is the futures, but we have a bearish engulfing. So here's what I think is going to happen. I have to go to GLD for gold. I think I had it charted up. Yeah. Okay, so this is what I think is going to happen with gold. You have this big trading range here. It's very obvious. Stupid mouse. And I think we're going to backtest that. I think we're going to backtest that range. It is a breakout. So, like, you know, if you look, gold actually had, maybe we hit the measured target. Pretty close. This is a cup and handle pattern on the weekly chart, long-term pattern that it's a accumulation pattern. It started out as a rounding bottom. That's a rounding bottom, but then it made the handle, so it's a cup and handle, and then the measured target of that is the lowest part of the cup up to basically the top. Take that at kind of the point of the breakout. It sets us up for something in that area. It's not super clean and clear, but it basically sets us up for, you know, these prices, and we're pretty close. I mean, yeah, maybe a little higher, but pretty close to that measured target. So that move, from my perspective, is basically done. Could go a little higher, but then when I roll in and look at kind of the price action, no bearish engulfing on the weekly, but you go to the daily. No bearish engulfing on the daily. It's just there on the futures, so we'll see. And so but we have negative divergence showing up on the daily chart. There's the negative divergence. So that can extend. We could see another push up and maybe put in more divergent highs. Negative divergence can build, but you know, I'm kind of on the lookout for a more major sell signal. And with rates falling, you know, that's not good for, actually that is good for gold. I always get that mixed up. Falling rates is good for gold. Rising rates is usually bad. But, you know, so rates are falling. So, you know, we've seen that. I'm not short gold right now, but we're building negative divergence, trend line to watch there. And if we do get a sell signal, I think we're going to come, it's going to be a major one. I think we're going to come back test kind of that point of the breakout way down there at about 195-ish, 200 on GLD. Be like $2,000 gold, I guess. So that would be a really good buy point if you get it. That's what I see in gold. And then silver is kind of the wild child. It moves a lot more. Yeah. I don't know. It's not a short anymore. Yeah. I don't know about silver. You got this trend line down here. Could go down there. Gold's kind of at support. So I put more weighting into gold, and then I just use silver as kind of like the juice, basically. KLAC. What is KLAC? What do these guys do? Electronic equipment? All right. It's kind of interesting. I don't really see negative divergence. You know, I see this high. Momentum was, I mean, you had mild negative divergence. It was right there, but it's kind of played out. Like I'm not using that anymore as like anything to read the charts from. Here you've got, you know, decent momentum. I mean, I guess that was negative divergence right there too. It's kind of played out though, so you're way oversold. Kind of the same as the stock market, really. Probably going to get that bounce, and then let me see if there's any kind of... One thing I like to do is volume profiles. You guys can, on TradingView, it's helpful just to know where like all the volume's at. So like on this move, you can kind of measure it out and just, it'll show you like there's all the volume. So most of the trades took place up here, and then you can see like the volume spikes. Align those volume spikes with support levels. That'll help you. So like boom, right there, you know, so good support there, great support just somewhere down there. I'd have to look at the level, but you look for the reactions. It's in a thin zone right now. That's a thin zone. So yeah, probably going lower, to be honest. Same as the stock market, probably going lower. Although, you know, you're really oversold. So I think you got to reset, maybe a little bounce, and then, you know, some lower prices. Coin. I know Bitcoin was kind of holding up a little bit. I would not put a lot of faith in Bitcoin. Coinbase. Let me get rid of this volume profile if I can. Yeah, broken trend. I have to, you know, you had the sell signal a couple weeks ago. Broken trend, heading lower. Hit some support. You saw the initial bounce off support. Like there. Same as the stock market. That's where I'm leaning towards like a little bounce like on Monday, because there's so many things that just hit like some support. And like if I go to the Mag 7, like Apple, yeah, we got some support there. I mean, they're all like, I think Meta was at some support. There it is. Yeah, so there was enough there to say, okay, there a lot of these are at support. And then when I'm going through these individual stocks, it's like the same chart basically. So they've all just kind of hit some near-term support. And you did see the bounce. So yeah, I mean, I don't know about this one. I defer to more the general market, because there's not, you know, there's not enough here, but I would say probably bounce, and then a break of 146.58 is your next sell signal. So it's objective to short on a break of support or a backtest of resistance. Resistance, you know, you obviously have the 200 days, maybe that trend line, backtest to that trend line. Those are your objective shorts. So right now there's no objective short. There's only long at support or short on a break of support or a backtest of resistance. That's it. Tesla. Almost done, guys. All right, Tesla. Yeah, down 10%. I mean, relatively, when I look at Tesla, it actually hung in there. You know, it's down 10% on Friday, but you look at like the recent price action, it's like really above the lows, whereas like things like Apple and all those, they just like, you know, blew up. So relatively, it's actually showing relative strength. Could be even putting in like a higher low. I mean, Tesla was relatively extremely weak, you know, from the highs to the lows. It fell 55%. So it's already had its big downside move. So, you know, Friday was more about like everything else. But I don't see much here. I mean, I don't see any bullish divergence on the daily. Let me look at the hourly. Yeah, you don't even have bullish divergence on the hourly. You've got price moving up, momentum moving up, no divergence. So probably going lower over time. I just, could rally, you maybe a back test. But over time, I think it's continuing to be in a downtrend, and it's got lower to go. Google. I did cover Google, I believe, in the last video. I can kind of look at it. That one's below support. Let me adjust. Maybe I can adjust this, but I just have to. To me, it looks like it's below that support level. Not by a whole lot. It is below it, so could go lower. Not all the Mag 8s looked the same, like hit support. Some had broken, but some had held, like Microsoft, unless I don't have this level. I mean, there's like a reaction high. I guess they're like tracking that because there's a couple things there. But yeah, not. I don't know. Some aren't as clear. So if it's not clear, I just stay away. But so below support, it's not objective to short though. Really, I mean, you broke support, so that is objective. But do you want to go home? Deeply oversold when a lot of stuff is at support on a Friday? I don't think so. I'd prefer to just miss the next move down because the risk reward is no longer there. We want to take trades where we have high probability, good risk reward, because there's no guarantees in this game, and we have to, we want to take the ones where we've got good chance to make money. Here, shorting, you don't have a great chance. You can make money and think you're a genius, but you take a lot of these trades when the chart looks like this, you're gonna probably lose money over time. So for me, it's not a short anymore, really. It's not a long. I wouldn't go long this. You do have, from what I can tell, I think I have to go to the weekly chart. Yeah, so there's your long-term bull market on the weekly on Google going back to 2004 when they went public. So there's your bull trend. In bigger picture, if you really want to think about it, this thing's still in a bull trend. All right, and it's not going to likely break just instantly. It will break. I'm pretty sure this thing's topped out. One of the reasons why I say that when I look at the weekly chart, I'll just show you. I mean, ultimately, you've been building negative divergence on the weekly, and it's only kind of gotten steeper right through there. So that divergence really, this was the divergent high, but anything over there. So all this price action on the weekly is divergent high. Tells me that the trend change is likely, and then what I want to look for is breaks of trendline support. Right now you closed, that's why I'm also saying, like, look, you closed at the reactions here. That was pretty good resistance. You had a big down move. You closed right there. Granted, you did close there before, and we've got enough reactions on the weekly chart to tell me that is a level of a reaction level, a level of support. And yeah, you're slightly below it, but it's too close on the weekly. So I would put decent odds. We get a little rally. All right, reset the indicators a little bit, come down, hit that more major support. There, I don't want to short there. You could get another bear market rally. And then in the future, I do believe this trend line is going to break. Hasn't broken yet though, so until that happens, I can't definitively say that this bull trend in Google's over. Okay, I'm gonna do 2 more and then I'm gonna wrap up. OPFI? I have no idea what that is. Yeah, junk stock. There's nothing here, guys. I don't know why. I mean, SPAC. Look, the SPACs are trash. Could go higher, though. That's a weekly chart. Let me get down to the daily. I wouldn't short it. I wouldn't short this. I'm not interested in this. You know, it's just, I'm just not interested, but kind of parabolic. I can't even really make a trend line. So I don't know, gambling stock for the most part, but it's at the 200s. I don't see any negative divergence. It could easily take out these highs, put in divergence, and then you'd probably want to bail at that point in time. For me, I'm not messing with it, but that's the most I see on that one. And then, oh, Cat Magic, I'll do yours. Thanks for the super chat. Ugh, I gotta clean my chart up. It's been a while since I've messed with this one. Yeah. So so the trend's broken. Bull trend's over. Your bull trend that started back in October of 2022 is over. Just like a lot of other stuff. All right. There's lots of other stuff where the bull trend's over. I mean, just to flip over, this is just an example, but it's a tech stock, and there's your bull trend from October of 2022, Broadcom. And it looks pretty much like the same chart as CAT, doesn't it? So that's what I'm saying. This is across multiple sectors. We're seeing broad market changes. That's why I'm leaning towards the bear market thesis, guys, because it's one thing to see stuff like this in tech stocks, and then, you know, other sectors are okay, but when I go from like CAT to Broadcom, 2 industries that are completely different, it's the same chart. So bear market, that's my, you know, we're looking to sell the rip. All right, that's it, which means when I'm looking for bounces, I'm going to try to catch those bounces, but I'm going to be looking to reload into shorts as they start to, as we rally. All right, so that's CAT gapping down. I got to see the wick there. Yep. See that? So you've got the reaction, you know, a little chop through there, but you got that reaction, and you've got, you know, enough right through there, and then closed, from what I can tell, kind of right on support. It's not like great support, it's just support. That's why I'm still leaning towards maybe a bounce, and then we'll go down to some lower supports that are better. If you were paying attention, hopefully, I don't know if you're long this or not, but you know, divergent high. All right, divergent high. That was the last one. And then, so that was like, and also island cluster top. That's an island cluster top. Gap up, gap down. You know, a lot of times they'll rally it back into the level to kind of run some stops, but that's why I had this line marked here. I said, okay, that a daily close above there would negate the island cluster top, and then you could stop out. But otherwise, treat it as a top. And if you did that, you basically caught the top. All right. But not a short right now. This thing, if I look at the weekly, is that 2009? Yeah. That must be COVID there. Yeah. I only have like two reactions, so it's not my favorite trend line, but it's the best I can do. And I would suspect that we're heading down there over time. You probably get a little bounce here, and I would mark this weekly. I like that. That's a resistance level, and then you've got the trend line overhead. So for me, I don't know how it's going to go in the very short term. It might do this: rally up, undercut the lows, put in a divergence, then you get a more sustainable, stronger bear market rally, hit resistance. There, maybe it stops there, maybe not. You could go up and back test. It's really hard to say, but objective to short there, and objective to short on the back test. That's a weekly chart, so it's kind of bigger picture stuff, but yeah. All right, that's all I got. So I'll wrap up, and we'll pick it back up next week. One thing, guys, I am going to be on vacation next week, so I will not likely be putting out a ton of videos. I can still keep up with the private member group, but definitely not nearly as active. So I will have to be a little bit, I'm just not going to be able to put out as much stuff because I'm going to be busy doing stuff. But in the morning, I can kind of get to some stuff and all that. So that is that's what's going on. So all right, appreciate it, guys. Catch you on the next one.